Hello everyone, welcome back to Neffy Cat. We're so glad that you can join us today. Today, I want us to have a discussion about different types of stocks, some of the more common types, and including two different types of investing strategies that people do. And so I'm just going to start right off here. This is one of the types of ways that people, when they have wealth, usually this comes when people have already built up a lot of capital, but they'll purchase into dividend stocks. So a dividend stock pays a person a certain amount every month. Or excuse me, not every month, but every quarter, and a certain percentage every year for continuing to hold the stock. There's a lot of people who've been able to make their livings through that, but it does usually take quite a lot of capital. And the other type of stock that others often purchase into, and this is the area that I'm into as well, are growth stocks. So with a growth stock, a lot of times these are smaller companies compared to the dividend stocks, which are usually bigger companies. With a growth stock, the idea is that you buy them low and then you sell them high. And so what you like to see is you like to see that price grow and grow and grow so that your capital grows. And then now let's discuss some different types of stocks. So we know that there's different strategies. The bigger companies tend to be dividends. The smaller companies tend to be growth stocks. But I want to discuss something you've probably all heard of. You've heard of like ETFs, index funds, and also just a regular business stock. And I want to go into those differences for a minute. So let's start with index funds. Index funds are usually people's mutual funds. A lot of you have heard of 401ks, and a lot of times these types of stocks purchase into different types of businesses. So you'll see here there's Temptations, there's a Biscuit, and then there's some canned chicken. That's a wonderful symbol for a mutual fund. And these are index stocks. Interestingly, they're usually calculated at the end of the day. Let's contrast that to an ETF fund. So an ETF fund is also a company a fund that purchases into a variety of stocks, but I have noticed that they'll tend to be in one area. And they're also traded like regular stocks on the stock market, so there's not just a end of the day calculation for them. You can buy and sell them just like you do, a regular stock on the stock market. And then here is our regular stock. This is a wonderful symbol of just an ordinary stock that one can buy into an ordinary company. And so when one buys into this, it's into the specific company. And so it's very helpful, if you're really wanting to do this, if you're wanting to do this long-term particularly, that you learn, what their earnings reports are. You learn about those. You find out how that company is doing. Is that a solid company? Does it have a concrete plan? Does it have good earnings coming in? And those are things that you have to study and decide. Of course, you look at the technical indicators and factors as well with those. And you ideally, once again, want to buy in low and sell high, but that's something you do by default, ideally. Although if you're doing a technique that's called dollar cost averaging, that's not the case. Dollar cost averaging is just when you put in a certain amount of money, say every week or every month, into a stock or into an ETF or into an index fund. And you basically put that in no matter how much or how much it raises or not, or how high or low the price of the stock is. Most of us, though, a lot of us, we do more fundamental and technical analysis before we buy into our stocks. So our fundamental analysis is, like I was mentioning, you really study the company. You find out how it is, how is its money, how much money is it bringing in, what is its market cap, like we looked at yesterday. And then the technical analysis is analyzing the price action of the stock. And we'll go more into those types of things in later videos too. thank you so much for being here with us today. I'm going to see if he'll eat some of the dividends. Yes, he's going to have some of the dividends. Are you going to take some of the dividends from your fund? Yeah, so maybe not. Maybe he says, I'll keep these invested. Well, thank you all so much for joining us today. Please don't forget to take your pause and hit the like button and the subscribe button. You can also hit the notification bell so that you can see all of Neffy's videos. And also don't forget to share this with others, because it would be really nice for other people to get access to this knowledge in such a fun way. Yes, I'm trying to keep it very simple for everybody instead of making it really complicated, so that those of you who really don't know a lot about finances, like I didn't used to, will have a chance to really learn. Thank you all so very much for your time here today. Thank you. You all have a wonderful day. Bye-bye.